You know that feeling of frustration when your strategy signals you to trade, you open a position, and then the price immediately reverses and triggers a stop loss? If this happens to you regularly, you definitely need to watch this video. Today, I'll reveal how I filter out the majority of fake signals given by any strategy in a way you haven't seen before. Traders, if you're enjoying the content, don't forget to like and subscribe. Also, turn on notifications so you don't miss any future uploads. So let's get into the indicator selection. We're looking at the euro against US dollar on the 5-minute time frame, and we'll build a simple trading strategy using only 2 indicators. First, let's add the follow line indicator. The one you're looking for is by Dread Blitz. For the second tool, let's search for the MACD plus 200 SMA strategy by Chart Art. Now, let's make some slight adjustments to these indicators. Open the settings of the follow line indicator and disable the trend line. Next, open the settings of the MACD plus SMA and uncheck some options in the style as well. Let's go over the indicator overview. The follow line indicator prints blue and red signals on a chart. A blue label signals to buy and a red label signals to sell. The SMA plus MACD indicator consists of 2 parts, the colored SMA and the bar colors. If the price is moving below the red SMA, the price is in a downtrend. Red bars indicate strong selling pressure, and blue bars signal a consolidation phase. Conversely, if the SMA is green and the price is moving above it, the market is in an uptrend. Now that we understand how these indicators function, let's build a simple trading strategy with these tools. This trend-following strategy includes 4 rules. The conditions for a buy trade are as follows. First, the follow line indicator issues a buy signal. Second, the price is closed above the SMA. Third, the SMA is green. Fourth, the price bar is green. All these conditions must be met simultaneously when the signal is issued. The opposite is true for sell trades. Even though these rules are simple, the strategy works pretty well, but isn't ideal. It struggles in a range market, leading to many fake signals and potential drawdowns. To eliminate fake signals and ensure high-quality trades, we need to add one more tool, and fear not, I'll show you a hack just before the end of the video to use more than 2 indicators on free version of TradingView. The QQEMT4 indicator by Glaz. The QQE, or Quantitative Qualitative Estimation, is based on the Relative Strength Index and smoothed with a Wilder's smoothing method. It consists of 2 lines, the QQE line, the main line, and the signal line. This indicator is super versatile, identifying trends, overbought, oversold levels, and entry-exit points. For our strategy, we'll use this tool effectively and uniquely. Welcome aboard our crypto arc, where dreams meet freedom. Join us on this journey as we empower crypto believers with knowledge and tools to achieve their goals. And guess what? We're just getting started in this world of endless possibilities. Click the link below to join us now. Enjoy 0 fees on spot trading for the first 30 days and a chance to win up to 30,000 USDT in deposit rewards. Join Bybit today and ride the wave of crypto success. To confirm a long trade, all previous rules must be met, and the QQ yellow line must be above the red line, confirming a bullish trend. Additionally, to confirm the price action's momentum to the upside, draw a line from the most recent high to the current value. Zoom in to see it better. Find the recent high by looking at the last time the QQE was bullish, meaning the yellow line was above the red line, and find the peak during this time. The ultimate confirmation for a long trade is an upward pointing trend line. If the line is flat or pointing downwards, do not enter the trade. For this strategy, we target twice the risk. Do the opposite for sell trades. Wait for the sell signal from the follow line indicator Ensure the price is below the red SMA and bar colors are red, and the QQ yellow line is below the red line. Draw a line from the recent low to the current value, confirming lower lows for entry. By the way, traders, you can make the follow line indicator faster by unchecking the ATR filter. You'll get more signals that way. Let's find some more signals given by the strategy. Pay close attention to these examples. Here we see a long entry where all basic conditions are met. The QQE is bullish, and the yellow line is making new highs, so we can confidently enter the trade. Notice how many fake signals this indicator eliminates, leaving only high-quality ones. However, no strategy is perfect, and there will still be some losing trades, but those are less frequent. Let me show you the backtesting results so you know what to expect. I tested the strategy 100 times. The win ratio was 82%, with a risk-reward ratio of 2:1. After 100 trades, the strategy increased the account size by almost 300% with no leverage, turning $100 into almost $300. Overall, pretty good results. Definitely try this QQE method. You can apply it to any trend following strategy, and I'm sure the results will be impressive. Thanks for watching. I hope you found this video useful. If you want to see higher win ratio strategies, check out the recommended videos. Happy trading.